If you receive Social Security retirement benefits, Social Security disability insurance, survivor benefits, or Supplemental Security Income, this information applies to you. And as we go through this together, the goal is simple: to leave you feeling informed, reassured, and clear about what this increase means for you, how it is calculated, when it shows up, and how it fits into your overall financial picture. Social Security is more than just a check. For many Americans, it is the foundation of financial stability in retirement. That is why any permanent change to benefits deserves careful explanation, without pressure, without hype, and without confusion. Let us start with what has actually changed. The Social Security Administration adjusts benefits each year through what is called a cost of living adjustment, often referred to as COLA. The purpose of COLA is to help your benefits keep up with rising prices over time. When the cost of everyday necessities increases, Social Security benefits are adjusted so that your purchasing power is not slowly eroded. This year's adjustment is especially significant. Due to higher inflation levels affecting food, housing, energy, transportation, and healthcare, the Social Security Administration announced one of the largest cost of living adjustments seen in more than a decade. This increase is now permanently built into your monthly benefit amount. That means your new payment is not temporary. It becomes your new baseline going forward until the next adjustment is announced in a future year. For many households, this increase provides meaningful relief. It does not eliminate rising costs, but it helps offset them in a real and reliable way. Understanding this adjustment requires a look at how inflation impacts daily life. Inflation is the gradual increase in prices for goods and services, which means that over time, the same amount of money buys less. For retirees and beneficiaries on fixed incomes, this can be particularly challenging, as expenses may rise while income remains stagnant. The cost of living adjustment is designed to counteract this effect, ensuring that Social Security benefits do not lose value over time. This mechanism has been part of the Social Security program for decades, reflecting a commitment to maintaining the purchasing power of benefits for all recipients. To appreciate the significance of the cost of living adjustment, it helps to know a bit about its history. The COLA was first introduced in the early 1970s, following legislation that tied Social Security benefits to inflation. Before that, benefits were increased only through special acts of Congress, which often led to irregular and unpredictable adjustments. The adoption of automatic COLAs marked a major step forward in protecting beneficiaries from inflation. Over the years, the method of calculating COLA has been refined, and the consumer price index used has been updated to better reflect the spending patterns of elderly and disabled individuals. While no measure is perfect, the COLA system has generally succeeded in preserving the value of Social Security benefits. In years with high inflation, like the current one, the adjustment is larger, providing more substantial relief. In years with low inflation, the adjustment may be small or even zero, but the benefit amount does not decrease. This historical context underscores the reliability of the Social Security program and its commitment to adapting to economic changes. Now let us talk about how this increase is actually calculated. The Social Security Administration uses data from the Consumer Price Index for urban wage earners and clerical workers to measure inflation. This index tracks changes in the prices of a basket of common goods and services, such as food, clothing, shelter, and medical care. When prices rise over a specific period, that data determines the COLA percentage for the following year. Once that percentage is set, the Social Security Administration applies it evenly across eligible benefits. Your current monthly benefit is multiplied by the official COLA percentage to determine your new amount. For example, if someone was receiving $1,500 per month and the COLA is 8.7%, their new monthly benefit would increase by approximately $130 to $150, depending on rounding and individual benefit calculations. This increase applies automatically. You do not need to apply, request it, or fill out any paperwork. the adjustment happens behind the scenes and is reflected directly in your payment. This applies to Social Security retirement benefits, Social Security disability insurance, survivor benefits, and Supplemental Security Income, though Supplemental Security Income calculations follow a slightly different structure tied to the federal benefit rate. What matters most is this: the increase is permanent. It becomes part of your benefit moving forward, helping you plan your budget with greater clarity. To illustrate further, consider another example. Suppose a retiree receives $2,000 per month. With an 8.7% adjustment, their benefit would increase by about $174, resulting in a new monthly amount of $2,174. This extra money can help cover higher costs for essentials like prescription drugs, utilities, or groceries. For individuals receiving supplemental security income, the federal benefit rate is adjusted similarly, ensuring that those with limited incomes also see an increase to keep pace with inflation. Consider also the impact on disabled workers and survivors. For a disabled worker receiving Social Security disability insurance, say with a monthly benefit of $2,200, an 8.7% increase would add about $191, bringing the new total to $2,391. This can be crucial for covering adaptive equipment, therapy costs, or other disability-related expenses. For a survivor beneficiary, such as a widow or widower receiving $1,600 per month, the increase would be around $139, resulting in $1,739 monthly. This extra income can help maintain stability after the loss of a loved one. These examples show how the cost of living adjustment supports various beneficiaries in meeting their unique needs. Many people ask when they will see this change. Social Security cost of living adjustments are typically applied beginning with January payments. That means your January benefit reflects the new amount. If you receive your benefits by direct deposit, you will see the increase in your bank account. If you receive paper checks, the updated amount will be reflected there as well. The payment schedule itself does not change. Only the amount does. It is important to note that sometimes there might be a slight delay in processing, but in most cases, the increased amount appears on the usual payment date. For those who receive benefits on behalf of others, such as representative payees, the increase will also apply, and they should ensure that the funds are managed accordingly. Additionally, if you have recently started receiving benefits, the adjustment will still apply to your payments, so long as you are eligible during the period when the increase takes effect. If you are unsure about your payment date, you can check the Social Security Administration's payment schedule online or through your account. Now let us talk about what this increase does and does not mean. This adjustment is not a bonus. It is not a stimulus payment. It is not a special one-time distribution. It is part of how the Social Security system is designed to function during periods of rising prices. It also does not change eligibility rules. You do not gain or lose eligibility because of the increase. It simply adjusts the amount you receive. It does not automatically change Medicare premiums either. Medicare premiums are determined separately and managed by a different agency. While higher Social Security benefits can help offset healthcare costs, Medicare premium changes follow their own schedule and rules. For instance, Medicare Part B premiums are often deducted directly from Social Security benefits, and any change in those premiums will affect your net payment. However, the cost of living adjustment is applied to your gross benefit, so even if Medicare premiums rise, the increase in your Social Security benefit may help cover that additional cost. It is also worth noting that for some beneficiaries, there are protections in place to prevent their Social Security benefits from decreasing due to Medicare premium increases, but this depends on specific circumstances. To make this more concrete, let us look at a practical example. Imagine a retiree named Jane. Jane receives $1,800 per month in Social Security retirement benefits. With an 8.7% cost of living adjustment, Jane's monthly benefit increases by roughly $156. That means Jane now receives approximately $1,956 per month going forward. That extra amount may help cover higher grocery bills, increased utility costs, or prescription medications. It may not solve every financial challenge, but it provides steady support that Jane can count on every month. And that reliability matters. For those receiving supplemental security income, the adjustment works slightly differently, but follows the same goal. The federal benefit rate is increased to reflect inflation, ensuring that individuals with the lowest incomes are not left behind as prices rise. Supplemental security income recipients should also see their payments adjust automatically, with no action required. For example, if the federal benefit rate for an individual is $800 per month, and the COLA is 8.7%, the new rate would be about $869 per month. This increase can be vital for covering basic needs like food and shelter. Now, many people wonder how to confirm their exact new benefit amount. The most reliable way is through your My Social Security account on the official Social Security Administration website. This secure, free service allows you to view your benefit statements, payment history, and updated monthly amount. If you do not yet have an account, setting one up can give you peace of mind and direct access to official information without relying on outside sources. Keeping track of your benefit amount helps you budget accurately, avoid surprises, and stay in control of your financial planning. To create an account, you will need to provide some personal information, such as your Social Security number, date of birth, and mailing address. Once set up, you can use the account to manage your benefits, report changes, and even request replacement documents. It is a valuable tool for all beneficiaries. Additionally, you can receive official notices from the Social Security Administration electronically, which can be more secure and timely than paper mail. If you prefer not to use online services, you can contact the Social Security Administration by phone or visit a local office, though wait times may vary. It is also important to place this increase within your broader financial picture. For many retirees, Social Security is one part of their income, along with pensions, savings, or retirement accounts. The cost of living adjustment helps balance rising costs across your entire budget, not just one expense. Even a modest increase can make a meaningful difference when planned thoughtfully. For instance, if you have a monthly budget that includes housing costs, healthcare expenses, and discretionary spending, the increase from Social Security can be allocated to areas where costs have risen the most. This might mean putting more money towards utilities in the winter or towards medications if health costs have increased. By integrating the increased benefit into your overall financial plan, you can ensure that it serves its purpose of maintaining your standard of living. It may also be helpful to review your budget periodically to account for changes in expenses and income. If you work with a financial advisor, discussing the cost of living adjustment can help you make informed decisions about your long-term financial strategy. Looking beyond the immediate increase, it is beneficial to consider how this adjustment fits into your long-term financial planning. Social Security benefits are designed to provide a foundation of income throughout retirement, but they are often most effective when combined with other sources of financial security. The cost of living adjustment helps maintain the purchasing power of that foundation over time. As you plan for the future, you might think about how the increased benefits can contribute to your savings goals, emergency fund, or legacy plans. For example, if your essential expenses are covered, the extra money could be directed towards a health savings account, a retirement account like an IRA, or even a modest investment portfolio. Conversely, if your expenses are rising faster than the adjustment, you may need to review your spending or explore additional income sources. Regularly revisiting your financial plan with the updated benefit amounts can help you stay on track for a secure retirement. It is also a good time to ensure that your beneficiary designations are up to date on all accounts, including Social Security, pensions, and insurance policies. By taking a proactive approach, you can enhance your financial resilience and peace of mind. Now, there is another topic that often comes up when benefits increase, and that is taxes. Social Security benefits may be taxable depending on your total income from all sources. The increase in your benefit could slightly raise your overall income level, but that does not automatically mean you will owe more taxes. The Internal Revenue Service uses a formula based on combined income, which includes adjusted gross income, non-taxable interest, and half of your Social Security benefits. If your combined income remains below certain thresholds, your Social Security benefits may not be taxed at all. If it exceeds those thresholds, a portion of your benefits could be taxable. Some retirees choose to voluntarily withhold federal taxes from their Social Security payments to avoid owing money at tax time. This can be done using IRS Form W-4V. Withholding is optional and depends entirely on your personal financial situation. If you are unsure, a trusted tax professional can help you decide what is best for you. It is also worth noting that state taxes on Social Security benefits vary. Some states do not tax Social Security benefits at all, while others may tax them partially or fully. Checking your state's tax laws can help you understand your total tax liability. For those who are required to file a tax return, reporting the increased benefits accurately is important to avoid penalties or interest. The Social Security Administration will send you a Form SSA 1099 each year, which shows the total benefits you received, including any cost of living adjustments. This form should be used when preparing your tax return. In addition to federal taxes, it is important to consider state taxes on Social Security benefits. Each state has its own approach, with some offering full exemptions, partial exemptions, or no exemptions at all. For instance, states like Florida and Texas do not tax Social Security benefits, while others may tax them if income exceeds certain levels. This means that depending on where you live, the increase in your benefits may have different implications for your state tax bill. Checking with your state's Department of Revenue or a local tax advisor can help you understand your specific situation. Moreover, if you move to a different state, your tax liability may change, so it is wise to review this aspect during relocation planning. Understanding both federal and state tax rules ensures that you are not caught off guard when filing your taxes and can make informed decisions about withholding or estimated payments. Another concern many people have is how this increase affects other assistance programs. Some seniors also receive Medicaid, food assistance, or other income-based benefits. Each program has its own rules for counting income, and Social Security benefits may be treated differently depending on the program. While an increase in benefits could affect eligibility in some cases, many programs include exclusions or adjustments that reduce the impact. The Social Security Administration does not automatically change your eligibility for these programs when the cost of living adjustment is applied. If you participate in other assistance programs, it is wise to check with those agencies directly to understand how your updated benefit amount may be treated. For example, for Supplemental Nutrition Assistance Program benefits, also known as SNAP, Social Security income is counted as part of your household income. An increase in Social Security benefits could potentially reduce your SNAP benefits, but there are deductions and thresholds that may mitigate this effect. Similarly, for Medicaid, income limits vary by state, and some states have programs that allow for higher income levels for elderly or disabled individuals. Contacting your state's Medicaid office or a benefits counselor can provide clarity. Additionally, for housing assistance programs like Section 8, rent is often based on a percentage of income, so an increase in Social Security benefits might lead to a slight increase in rent, but it should be proportional and manageable. The key is to stay informed about the rules of each program you rely on and to report any income changes as required. If you are unsure how the increase in Social Security benefits affects your eligibility for other programs, seeking assistance from a benefits counselor can be invaluable. Many states have state health insurance assistance programs or area agencies on aging that offer free counseling on benefits and entitlements. These counselors can help you navigate the complex rules of Medicaid, Medicare savings programs, low-income subsidy for prescription drugs, and other assistance programs. They can also assist in completing applications or reporting changes. Additionally, nonprofit organizations often provide guidance on managing benefits and budgeting. Taking advantage of these resources can help you maximize your benefits while ensuring compliance with program requirements. Remember, You do not have to figure everything out on your own. Help is available to support you in making the most of your Social Security increase. Now, an important reminder: whenever news spreads about benefit increases, scammers often try to take advantage of confusion. The Social Security Administration will never call, email, or text you asking for your full Social Security number, bank account information, or payment to release benefits. If you receive suspicious messages, hang up and contact the Social Security Administration directly or report it to the Office of the Inspector General. Staying informed through official channels is one of the best ways to protect yourself. Common scams include imposters claiming to be from the Social Security Administration and stating that your benefits are suspended due to fraud or that you need to pay a fee to receive your increase. These are fraudulent attempts to steal your personal information or money. Always remember that the Social Security Administration communicates primarily through mailed letters or through your official online account. If you are ever in doubt, do not provide any information. Instead, call the Social Security Administration's official phone number or visit their website independently. You can also report scams to the Federal Trade Commission or your state's Attorney General's office. Protecting your identity and financial information is crucial, especially in times of change. As we come toward the end of this update, I want to leave you with reassurance. This permanent increase reflects the system's ongoing effort to help seniors and beneficiaries maintain stability during changing economic conditions. It is designed to help your income keep pace with inflation and preserve the value of the benefits you earned over a lifetime of work. While no adjustment can eliminate all financial challenges, this increase provides dependable support you can plan around. Understanding how it works gives you confidence. Knowing what to expect helps you stay in control. And staying informed protects your peace of mind. Social Security remains one of the most reliable income sources for millions of Americans. Keeping up with these updates ensures you get the most from the system and avoid unnecessary stress. If you ever have questions, the official Social Security Administration website and your My Social Security account are the best places to turn. Thank you for taking the time to stay informed. Your financial security matters, and understanding these changes is one step toward protecting it. Take care, stay safe, and we will be here to guide you through the next update when it comes.